So 2024 was another incredible year in the market. I just simply executed to my plan and was able to not only keep riding the momentum of 2023, which saw triple-digit gains, but also load up on our favorite stocks like Tesla at 141, SoFi in the 5s, Palantir in the low 20s, and more before seeing an incredible, massive run up here at the end of the year, giving many of you guys not only more shares, but also seeing your portfolio swell by triple digits once again. But it's almost 2025 and valuations are now really stretched on many of our favorites, unlike the prior year. So I'm going to give you my plan to take advantage of 2025, just like we did in 2024, but it does come with a massive warning that you must hear. So we'll talk about that as well. And if you don't have a plan for 2025 and you have no idea how to do valuations, how to analyze a company or anything else like that, the holiday sale is live, and once the holidays are over, the price goes up forever. So now is the time to join. If you want all of my buy and sell alerts at real time, you want to learn exactly how to do evaluation, how to do a plan, see my watch list complete with price targets, take 5 courses for free, get your free coaching, be a part of the best 6, 7, and 8-figure Discord out there. Use our stock analyzer tool. Guys, there's so much. Check out the pinned comment, see if a membership's right for you. But let's jump into the plan. So anytime I'm sitting down and I'm looking to make a plan for my stocks, I use a simple 4-step plan to keep it simple. Guys, that's key. So basically, when the chaos comes, which always happens, every single year it happens, I am prepared. So we'll talk about that. Plus, we'll talk about the one big warning you need to heed. You got to heed this warning, guys, or you will end 2025 in a disaster scenario instead of a huge success. So we'll make sure we cover that too. So number one, I will take what the market gives me. Don't play their game, guys. Do not play Wall Street's game. They may not provide it up front. You might not get it when you want it, but they always provide opportunities in the end. They always have, and they always do. That is what matters. They're trying to get you to have emotion about this and emotion about that and sell out of this and buy into that, then sell out of that and buy back into this and all these other things like that. You don't want to do that. So what does that mean exactly? What does all that mean? It means you continue to buy undervalued assets based on valuation, and those are going to shift once again this year, especially given the massive run-up that we had here at the end of the year here. That has clearly shifted the assets that you want to buy. Of course, everybody wants to buy those assets now, right? That's a famous meme. I'll see if I can find it, and I throw it up here on the screen if I can find it there, where nobody wants to buy Palantir at $7, but then whenever it's approaching 100, everybody wants to own Palantir then, that sort of thing like that. That's Wall Street's narrative. That's what they want you to do. When you're doing the opposite and you're loading up in the 7s, hey, I don't even want to get in that crowd. You know what? I hate lines anyways, right? I don't know if you guys hate lines, but I hate lines personally. So I will happily eat a little bit earlier or go to a different spot altogether to avoid a line altogether, because that sucks. That's not fun. So if it's not fun in our lives, it's definitely not fun to line up to buy a stock whenever it's significantly overvalued. It all ends up kind of ending in the same again. You'd always want that other experience over there. So don't do that. Wall Street gives opportunities in every single target market, every place you want to buy everything else. I mean, we had small caps get destroyed, and I thought that was a big gift. But then we got big tech that got destroyed, especially back in 2022, right? I mean, it was Meta, it was Google, it was Amazon, Nvidia. I mean, think about the best stocks over the past couple of years here, and nobody wanted them back then because they gave you the gift of big tech. And then some other big tech got beaten down, and a few small caps and a few mids as well. And then some old man style stocks, those dividend style stocks, started getting beaten up. And then the Fed was doing this and that, and money was coming in and going here and going there, all that sorts of things like that. The point being, you got opportunities over the past couple of years in every single category of stock, and great companies too. Not just the trash, not just the things that nobody wanted. I mean, we're talking great, incredible, generational companies. You got incredible deals in at various times if you just took what Wall Street gave you in the end, instead of trying to force your way into this stock or that stock or whatever the case is. I mean, guys, just for example here, some years I buy a ton of Apple. And then some years, and sometimes more than a year, I buy none, because valuation is what tells me whether or not I should buy Apple or not whether or not I want to buy more Apple or not. In the end, I've got to stick to my plan and understand that valuation is what matters, and I've got to take what the market's going to give me. And talking about valuation, that's kind of leads me into the next point, which is I will put in the work and have price targets for each stock that I own. You cannot execute on number one if you have no idea what fair value is, and if the market goes south, you are going to sell because you don't know what you own. You can tell me that's not exactly how I would do it, but we have all been in that spot and we have all done it. We have all sold out whenever that time happened. And that's just honestly, it's human nature. It's part of the stock market, but more importantly, it's part of not understanding what you own. When you don't understand what you own and Alex bangs the table and all of a sudden all the YouTubers are all saying it's a bad company and sell out and run away and CNBC and everybody else is saying it's a bad company there. If you understand what you own, you laughed at that and you bought the freaking stock and you loaded up on even more. But that only can happen if you know what you own. If you have not done actual due diligence and you've just simply been flying by the seat of your pants based upon what I say, based upon what somebody else says, or your intuition or something else of that nature, guess what? You are setting yourself up for those periods of time where you get scared and you sell out of the stock. It's amazing how sentiment changes really quickly from this stock's terrible, they're not going anywhere, there's all these problems, and all of a sudden it has a big run up, price goes up, then all of a sudden everybody's interested, it's the greatest thing since sliced bread. That is emotions. That is not proper due diligence. That is exactly why retail is known for buying high and selling low. It's not just a meme. It's not just something funny on the internet. It happens routinely with us as retail investors. And I want you guys to not do that. That only comes from doing the work, doing the due diligence, learning, understanding how to do evaluation, and then understanding and setting price targets. So that way you can spot the difference between opportunity and overvalue, or you don't get scared whenever things go down and you don't feel the need to FOMO in either whenever things go up and all these people start making hype projections and everything else like that. You can tell the difference between all that because you've done your work, you've done your homework, so that way you don't get caught in either one of those scenarios. Number 3, I will raise cash during slow times and look for ways to increase my income and reduce expenses. Now, I bought like crazy in 2022 the entire year. I put more money in the stock market than I ever have in my entire life. So basically, there was no cash building. I was pulling cash from other investments, other places, anywhere I could find cash. I was grabbing it and throwing it over here in regards to the stock market. That's how crazy the deals were. And honestly, 2023 started out the same way. I thought I was going to have to do the same exact thing again and start using some other, debt instruments that I have and some other things of that nature in order to continue to pour money in the market because I just couldn't believe the stupid deals we were getting. But then all of a sudden, everything kind of ran. And so I stopped buying and I just started stacking cash. And then I started to deploy it again until the end of the year in 2023, when once again the market rallied again. So I backed off again and I just stockpiled cash again, continuing to replenish those stockpiles, which allowed me in 2024 to have the cash to keep buying great deals like SoFi in the 5s and Palantir in the 20s and Tesla in the mid 100s or so. Yeah, 141 is exactly where I was able to, and 169 as well. So Tesla right there in those areas. I was able to do that because I continued to build up my cash piles. When stocks went on a little bit of run, I kind of took a little bit of a breather there using my modified DCA and stacked back that cash. And of course, everything's kind of run here at the end of this year again. So I haven't been hardly buying at all and instead stockpiling cash again. This is how you ensure you have enough capital. Now, in addition to that, it wasn't just my stocks that I was doing that with. There's other parts to that. I have also found new business ventures, not just ones you guys know about, other ones that are outside of the sphere of what anybody can tell. I've gone there, pursued those, and monetized those as well. I cut out even more out of my budget this year to maximize my investing in regards to being able to put the maximum amount possible in there. You've got to work on all sides of the equation, not just the one, which is great. Hey, you look, you're back there stacking cash, but hey, work on that side hustle, work on that new business venture, work more on your real estate investing, cut out some more things out of your budget. We all have junk and discretionary things in our budgets that we can get rid of, or maybe we can renegotiate some insurances or something of that nature to get those costs down. It all adds up to big money in the end when you work it across the board. But that is what I do. Every single year I focus on my money loops getting bigger, basically more money coming in every single year from lots of different sources, not just one. And then 2, how do I continue to get my budget lower? How do I continue to keep my expenses low so I can maximize my investing overall? And number 4, I will ignore Wall Street, the media, and YouTube and just stick to facts. I don't care about economists whatsoever. Warren Buffett says if you have an economist on staff, you have one too many employees. They have been routinely wrong. If you haven't learned anything from 2021, 2020 on forward, when a lot of you guys started paying attention to the market here and started really getting into actively investing, it is that economists have no freaking clue what they're talking about. That is just universal. Obviously, Warren Buffett noticed this decades upon decades ago. So, clearly it's something that they haven't had a clue for a long time. But for whatever reason, I guess they make for good news content, whatever the case is. The point being, I don't care about economists at all. I also don't care about any political nonsense as well. Not going to run down that rabbit hole here, but you can go look. It doesn't freaking matter in the end in regards to stock market, stock investing, none of that garbage that's out there. It is just intended for a lot of other things that have nothing to do with stock investing in general and whether or not stocks are going to go up and down. So I could care less about any of that sort of stuff. And I also don't care about what the traders are doing as well because I'm not a trader. Sorry, I'm a long-term buy and hold investor. And what Wall Street is doing, the vast majority of Wall Street and the vast majority of traders and the vast majority of people here on YouTube and a lot of other places doesn't interest me because I'm not a trader. I don't care. Cool. That's great that this stock could go on a run here and it could stop here. And these are all the pretty lines and charts. That's awesome. I also know traders don't beat dead people. And I know I've had incredible returns and I haven't had to do any of that sort of stuff. I haven't had to figure out any charts, graphs, or get in and out or have any of the sort of stresses. And I haven't had to watch anything. And you can disappear for 2 weeks or 2 months and man, what do you know? Your portfolio went up. What'd you have to do for that? Absolutely nothing. That's why I just don't care about that. More importantly, now, if I was trading, I might care a little bit, but since I'm not a trader, I'm not going to concern myself with that. Now, if you guys out there, if you're a trader, then it makes sense to care to some sort of degree. So that way you can kind of gauge what's going on with the market there. But if you're a long-term buy and hold investor like me, what traders are doing means zero, nothing, nada, zip. That's what analysts are talking about. That's what people on CNBC are talking about. Who cares? Ignore it all. Don't care. Not even registering on my radar. I don't pay any attention to it. I also don't care about the latest hot stock that's going to go to the moon and 100x and that sort of stuff. We're seeing that again. That's popped up again. I hadn't seen it since 2021, but here it is again. Even on great stocks that I think are great companies. Hey, Palantir's here, and yeah, it's at 70 something bucks, but don't worry, $1,000 is right around the corner, just a year or two from now, and other ridiculous stuff like that. I don't care about the latest hot stock. I'm not interested in trying to find this hot stock here that's going to 10x this year, and the next year I'll find the next hot stock that's going to 10x, and I'm just going to 10x my money every year until I'm a multi-trillionaire. It's not realistic, guys. We've seen that over and over again, and it's just a waste of time to try to play that game and find the next hot stock and everything else. That's trader games again. Hey, go for it. You're a trader. Got it. I'm not, so I could care less about it. What I do care about is I care about earnings. I care about guidance we're going to get next quarter. I care about company performance. What's the management team doing? How are they navigating the various things that are out there? That's what I care about. That's what I'm paying attention to. That's what I'm listening to. And that's what I'm doing to help build my plan and then kind of make subtle changes to my plan as the year goes on based upon those earnings, based upon fundamental things that are going on with the company, not any of the other noises out there. You have to ignore the noise that is all designed to get clicks, likes, and a lot of other things that have absolutely nothing to do with making you a better investor. Don't buy into any of that sort of stuff. Focus on what matters. Focus on those earnings and those fundamental things with the company that make not speculative things, fundamental things that are tangible, that we can put values on, that we can realistically project out. That is what matters, and that is what keeps you out of trouble in the stock market. However, if you don't heed this one warning, it is going to absolutely destroy you for this year, and it's different than last year's warning and other warnings that I've given in the past. But you have to heed it or else you're going to get destroyed. And that is, don't FOMO into stocks. The media, big YouTubers, lots of different folks all over social media, everywhere. There's a lot of people that have blown up on X and a lot of other places that are once again pumping. And I mean, it's as if everyone has already forgotten the lessons of 2021 and everything is once again a 10x multi-trillion-dollar opportunity that you need to buy now because it's just going to add trillions to the market cap and all this other ridiculous stuff like that. And no, I'm not just bagging on, one specific group or anything else. I'm hearing it across the board with all kinds of stocks. It's as if everybody figured out, oh, hey, if you would have done that back in 2021, you had this big audience. And for the past 3 or 4 years, a lot of these guys have been able to quit their jobs and do a lot of other things of that nature. And so, hey, let's get out there and let's pump everything up this time now that everything's moving again. We got almost like a new crop of folks trying to pump the same exact thing. If you don't go back to those fundamentals, to valuation, and you start FOMOing into stocks because you're listening to a bunch of folks who are 10xing everything and multi-trillion-dollar everything and everything to the moon and all this other goofy stuff like that, you are going to get crushed. You are going to make mistakes and you're going to be in a similar spot to what you were at back in 2021 if you got caught up in all that sort of stuff. Now, it is not to that level that 2021 was. So I am not saying that at all, but I'm saying here at the end of the year, it has started. And if that sort of pumping continues through 2025 as it goes on, that's the exact situation we're going to be in again as another 2021 style situation where everybody thinks they're on their way to being a multimillionaire or billionaire or whatever the case is. And then a year later, all of a sudden stocks suck, everything's a scam and you're down 75%. That could very well be the situation again if that continues to happen. What I don't want you to do is I don't want you to FOMO in because just like any other time you have emotions, you're probably going to be right in the short term. If you FOMO into a lot of these momentum plays right now, they are going to go up. I would agree. But when a stock's trading at 1,000 PE like Tesla was back in 2021, for example, you were right in the short term to ignore me when it was at 350. And I said, this is crazy valuation. Like, I wouldn't touch it here. A lot of folks bought it and they were like, see, Luke, you're an idiot. You didn't know what you were talking about, because Wall Street gets ridiculous both to the up and the downside. So you saw it. I was wrong in the short term. However, I was absolutely right in the long term. As you saw, for 3 years, it traded down before finally getting its momentum. We're just now back making all-time highs again after a long, basically a 4-year hiatus from those highs. And you saw it right there. Wall Street got dumped to the downside too. It beat it down right. I mean, almost went underneath $100 per share. So there's a massive difference to me between buying a bunch of shares at 350, 400, whatever the case was. You were right in the short term, and then having to ride that 3-year journey down and then finally making all-time highs again before you back up, as opposed to just laying off then and then picking up those shares, well under $200 for the vast majority of us over the past 3 years or so, where you had opportunities to do that over and over and over again. Oh, by the way, to include just this year, just in 2024, you had opportunities to pick up the stock in the mid 150s or so. So that right there happens in the stock market. But when you're patient and you don't FOMO and you just basically let things play out, you're going to be wrong in the short term, just like I was back in 2021. But over the long run, you end up being just fine. And remember, if you want to learn exactly how to do evaluation, create a plan, see my complete watch list with price targets, see all my buy and sell alerts in real time, you want to take 5 courses for free, get free coaching to make you even better at investing in themselves, be a part of the best 6, 7, and 8-figure Discord, all helping you become a better investor. Make sure you take advantage of the holiday sale before it expires and the price goes up forever, and get your membership. Again, it's the pinned comment for anybody interested. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.